Let's break the scenario down and deal with it piece by piece. Initially, we're given a level of staff costs and office costs. So these should both be overheads, because as we know, in a retail business, the cost of sales is essentially just the cost of goods sold. So we need to calculate what the level of overhead should be each day. So 240 staff, an average cost of 30,000 per year, is of 7.2 million. To that, we need to add the cost of those offices and shops, which is 3.75 million. And when we do that, we get an annual total. So to convert, we need to divide by 365 days. And that gives us overheads of £30,000 per day. So that's the first step. We're then told, essentially, the revenue goal is 100,000. So let's set revenue to £100,000 per day. And the corresponding cost of sales should be 65,000. So that means that the gross profit should be 35,000 per day. So there's a gross profit margin of 35%, £35,000 per day of gross profit on 100,000 per day of revenue. So then we're told that receivables days should be 7 days. We're offering customers 7 days of credit, and also that we have to pay employees and suppliers after 7 days. So that's payables days is also 7 days. And then our goals essentially are to build up inventory balance to around £500,000, generate profit, pay dividends, and do so without using a bank overdraft. So we're going to need to decide what level of purchases to set. Let's set purchases initially to £30,000 per day. So if we click start, we notice revenue is only 46,000 despite the fact we've set it to 100, which means that gross profit is 16,000, so our gross profit margin is 35%, and we're losing money, £14,000 per day. So something's clearly not quite right. And what we can see is that purchases, if we're only buying £30,000 of product each day off our suppliers, then we can only sell £30,000. So purchases is limiting the revenue. The more we can buy each day off the supplier, the more we can then sell. So if we keep increasing this, we'll start to see revenue is jumping up, and now we get to a point where revenue is £100,000 per day, which is the target revenue. So if we now pause, reset, and click start, what we should find now is that we're purchasing £67,000 per day, with our cost of sales is 65,000, so the inventory balance is slowly increasing. We're making a £5,000 per day operating profit, and our net cash flow is positive each day. We're not in overdraft. So this will take some time, but these levels of purchases each day, revenue, overheads, etc., should allow us to slowly build up the inventory balance whilst not requiring a bank overdraft. And we can also see that the business is profitable. We can see a red credit balance developing in the profit and loss account. So that will allow us, after some time, you can speed it up so that we don't have to wait quite as long, but that should allow us to then pay dividends to shareholders and run a profitable and cash positive business.